the CFTC, the SEC, getting educated on it, big institutional investors starting to take Bitcoin positions, the media. Now you've got Bloomberg covering crypto, you've got CNBC covering crypto, you've got an entire world, media, analysts, politicians, financiers, and they're all starting to figure this out.
2024 is a year of significant change for the Bitcoin market and the cryptocurrency space as a whole, which attracts both experienced investors and beginners. Particularly, Bitcoin has been attracting attention thanks to noteworthy achievements like the U.S. Securities and Exchange Commission's recent approval of a spot Bitcoin ETF, which sent the asset to all-time highs. The excitement about the possible chances that the impending Bitcoin halving event may offer to investors is tangible. Here comes Michael Saylor, the brilliant CEO of MicroStrategy, who passionately defends Bitcoin as a fundamental approach to investing. Saylor provides assurances and motivation in an exclusive interview ahead of the much-anticipated Bitcoin halving event that is scheduled for April 2024. Previous instances of halving have caused significant spikes in the price of Bitcoin because to the natural scarcity that arises when fresh supply is reduced and demand either stays the same or increases. Come along as we examine Saylor's excellent explanation and discover why Bitcoin is a better asset class than other options in the conventional financial market. Remember to show your support while you watch by giving this video a thumbs up, subscribing to our channel, and turning on post notifications so you can see more interesting videos.
I think that the highlight in the past year is the institutional adoption of Bitcoin and the maturation of the asset class, along with the education of millions and millions of people as to why they might want digital property, what is a digital commodity, and what's its place in the macro economy. Now, to be clear, I still think we're very early. I personally think it's the highest quality property in the world, and I think it will appreciate the best over time. And as I pointed out to you, it has performed the best in the past 2 years versus every other option. So we've been right over a 2-year time frame. I think we'll be right over a 4, 8, 10-year time frame. What is Bitcoin? A digital commodity? Do I have to deal with that? Well, now Fidelity's talking about rolling out the 34 million retail accounts. You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC getting educated on it. Big institutional investors starting to take Bitcoin positions. The media. Now you've got Bloomberg covering crypto. You've got CNBC covering crypto. You've got an entire world, media, analysts, politicians, financiers, and they're all starting to figure this out. I still say we're early, right? This paradigm shift takes a decade. That phrase, there are decades when nothing happens and, weeks when decades happen. It really refers to paradigm shifts. And the thing that hits you about a paradigm shift is it's such an out-of-the-blue idea that no one can conceive of why you would even want it. Now we're studying this paradigm shift of digital energy, and why would I want to move a block of $1 billion of something from point A to point B through cyberspace in a split second with instant final settlement, right? Initially, if you roll the clock back a decade, we didn't have it. Every financial crisis we've had, right, in history of the world, and we've had 10,000 of them. There have been 10,000 currency collapses, from the Lydians to the Athenians to the Spartans to the Romans to the Venetians.
Let's take a minute to talk about some important Bitcoin developments before delving deeper into Michael Saylor's interesting insights. A prominent cryptocurrency exchange, Coinbase, has outlined a few variables that might affect the expected price changes related to the impending Bitcoin halving. While there is excitement about the halving possibly causing price increases, Coinbase warns that past tendencies point to a potential problem. This time of year usually sees weakness in the cryptocurrency market. Coinbase highlights a bright spot in spite of this. The increasing recognition of Bitcoin as digital gold may draw in new investors. Additionally, Coinbase believes that as more investors enter the market, any price falls may become less severe, which might encourage more aggressive purchasing during market troughs. It's important to remember that prior Bitcoin halving occurrences have frequently occurred in tandem with big price increases, like the one that was observed in May 2020. Nevertheless, a lot of experts are still optimistic about Bitcoin's long-term potential despite recent volatility. They think Bitcoin is going to rise to even higher heights in the future. Let's go back to Michael Saylor's interview, in which he discusses Bitcoin's enormous potential in relation to other assets.
The history is full of examples of an empire rises, someone mints a currency, the successors or the children of the conqueror debase the currency, the grandchildren debase it more, the great-grandchildren forget how they actually got the power, they spend everything, go wacky crazy, pretty soon the economy collapses, you can't pay your soldiers, they all defect, and the barbarians come over the gate and they take everything, including your debased gold. They melt it down, they purify it, they mint their own coin, and the cycle starts again. That's literally taken place 10,000 times. When people don't trust governments, right? We're at an all-time low in public trust of institutions. It doesn't matter what government, and they don't trust companies. And why? For good reason, because companies are influenced by governments, right? Right? If you're in America, you're certainly not going to trust a company in China. And if you're in China, you're certainly not going to trust a company in America. And then, a lot of people that don't trust domestic companies, and the Europeans and the Australians don't trust American companies either. So there's a lot of lack of trust. So if I can't trust that, then what can I trust? Where am I going to put my money? I'm going to do a slight detour here, Brian, but this is very interesting that I want to share with your listeners, which is I track the financial market since we embarked on our Bitcoin strategy. So here is what's happened since August 10th, 2020, when we adopted Bitcoin as a treasury reserve asset. Bitcoin is up 65%. MicroStrategy stock, and MicroStrategy's bought almost $4 billion, not quite, but nearly $4 billion of Bitcoin. MicroStrategy stock is up 66%. So we are tracking slightly ahead of Bitcoin. The S&P is up 14%. The NASDAQ is up 4%. Whoa, 4%. All of big tech is up 4%. Gold is down 18%. And, bonds, the ultra safe bonds, long-term bonds, down 18%. Oof. So in terms of asset classes, the crazy volatile Bitcoin is the best performing of all those major assets. And then you can say to yourself, well, I'm just going to invest in stocks. Okay, let's look at big tech. Google's up 37%, Apple's up 32%, Microsoft's up 16%, Amazon is down 22%, Facebook is down 45%, and Netflix is down 52%. Okay, little MicroStrategy, no one ever heard of, up 66%. Would you have guessed that a mid-sized software company, low-growth mid-sized software company nobody ever heard of, would outperform Google in the last 2 years by a factor of 2? And so last point I make, we compete against companies 100 times as big as us. Oracle, 100 times bigger than us. They're up 25%, IBM's up 3%, Salesforce is down 23%, SAP's down 47%. Okay, so what is the lesson of that? The lesson is we're in the middle of chaos. There is no place to hide. Your choice is you could buy gold, but gold is dead metal and it's just getting ground into the dirt, right? I can seize your gold. Gold is the half-life of money, and gold is 35 years. And you can't put gold on 8 billion iPhones. So the problem is there's no tech in gold, and it was a good idea in the 19th century, and it's centralized, governments can seize it, and the gold miners keep debasing it. They keep mining more gold, right? In the best year, you get 2% more. In the worst year, someone seizes a bunch of gold, dump it on the market, you get more than 2%. So people are looking for a safe haven. What's it going to be? Property in Africa? Property in Venezuela? You can't have property in North Korea, property in Argentina. A business where? A business in Argentina where the currency collapses. What good are your cash flows if the currency that you generate the cash flows are collapses in value?
In his insightful observations, Michael Saylor explores the complex web of historical cycles in which empires rise to prominence only to have their currencies depreciate under succeeding generations, which eventually brings about economic collapse. By utilizing an abundance of historical examples, Saylor effectively demonstrates how this long-standing trend of currency depreciation has repeatedly transpired throughout human history, undermining public confidence in both corporate and political establishments. The main theme of Saylor's story is the widespread lack of trust that permeates modern society, with people wondering where to safely invest their money against a backdrop of political and economic uncertainty. This general attitude highlights a basic problem. In a society where mistrust reigns, what options are left for protecting money and guaranteeing long-term financial stability? In an unexpected shift of direction, Saylor highlights MicroStrategy's audacious adoption of Bitcoin as a treasury reserve asset in August 2020, which sparked a radical change in the business's approach to investing. Since making this crucial choice, Bitcoin has grown into a veritable monster, outperforming traditional assets like stocks, gold, and bonds by an enormous amount, and providing astounding returns of 65%. Saylor provides an engaging account of MicroStrategy's surprising success in the market by contrasting the rapid ascent of Bitcoin with the presence of major giants such as Apple and Google. Saylor challenges viewers to accept the revolutionary potential of Bitcoin as a bulwark against the turbulent currents of the financial world by using this lens to challenge long-held beliefs about investing knowledge. Saylor highlights the limits of traditional safe havens like gold in an increasingly digital society and advises against investing in them among the din of market volatility and geopolitical unpredictability. Rather, he promotes alternative assets such as real estate and companies, stressing the vital significance of steady cash flows against the backdrop of depreciating currency. Saylor essentially acts as a clear call to action in his passionate speech, asking listeners to reconsider their investing approaches and welcome Bitcoin's disruptive potential as a symbol of financial independence at a time of unheard of unpredictability. Don't forget to like and subscribe for more videos like this.